G'day and welcome back to Unbanked Bullion. Before we dive into today's updates, I want to give a quick shout out to one of you guys in the comments of my last video. They reminded me of the real reason behind that brutal drop we saw in gold and silver last week, and they were spot on. It was the massive SpaceX IPO. It went public last Friday, and it was literally the biggest stock market debut in history. Millions of investors and huge index funds were scrambling for cash, pulling liquidity out of safe havens like gold and silver just to dump into SpaceX stocks. But while the markets are dealing with that, SpaceX Shakeup, we've just had a massive geopolitical pivot. The US-Iran peace deal that the whole world's been keeping an eye on, it's apparently back on for who knows how long. The Swiss government just confirmed that both sides are signing the official memorandum this Friday in Switzerland. And looking at the immediate ripple effect, crude oil prices have already tanked about 4%. And the US naval blockade is already lifting to let oil flow through. So yes, the SpaceX IPO and the Swiss peace deal are creating massive short-term waves. But if you step back from the daily headlines, there is an even bigger story happening underneath that the mainstream media is completely ignoring right now. And that is the physical supply. So, if we have a massive multi-year supply shortage, why isn't the price already sitting at $150 an ounce? Well, to understand where the price is actually valued right now, you have to look at the absolute best cheat code for precious metals investors, the gold to silver ratio. If you aren't familiar with it, this ratio simply tells you how many ounces of silver it takes to buy 1 ounce of gold. Right now, that ratio is sitting at around 61 to 1. To put that into perspective, back when silver took a massive hit during the corrections over the last few months, that ratio blew up to near 85 to 1, meaning silver was dirt cheap compared to gold. But when silver made its massive explosion run earlier this year, the ratio compressed all the way down toward 50 to 1. Now, sitting here at 61 to 1 tells us something crucial. The silver is quietly starting to outperform gold on the daily charts again. Historically, when we are in a broader precious metals bull run, this ratio sinks deep into the 50s. If gold holds its ground, a drop back to a 50 to 1 ratio means silver has some massive catching up to do. It's a screaming signal that at today's prices, silver is still modestly undervalued. And if we have a look, I'm not the only one looking at these charts and seeing an undervalued setup. The big institutional smart money is tracking this exact same ratio, which is why their long-term price targets are sitting way above where we are trading today. JP Morgan is currently maintaining a full-year forecast for silver at $81 an ounce. When you convert that over to Australian dollars, we are looking at a target of well over 120 per ounce. The London Bullion Market Association census is sitting right around there with them, averaging right around that $119 mark. Remember, we are sitting right around that psychological $100 level today. With the panic of the SpaceX IPO cooling down and the Iran ceasefire easing the pressure on inflation, and a literal physical storage of metal in the vaults, I reckon the bottom is officially in and we are looking at a steady march back towards those $120 per ounce targets. But I want to know what you guys think. Was that massive drop last week the ultimate buying opportunity to stack more physical, or do you guys think that the Federal Reserve are going to throw a massive spanner in the works at this week's meeting? Drop a comment below and let me know what your thoughts are. Make sure you guys like the video and subscribe, and I'll catch you guys in the next one. It's Unbanked Bullion.